I would like to introduce the next panel, Mr. Simon Davies, co-founder of DXP Partners. Following him, Mr. Shin, founding partner of Shorooq Partners. Alex Mahr, co-founder and managing partner of Stryber. And Sara Asad, investment and community MSA, Novo. Directing us through this valuable discussion is our moderator, Josh Rodger, investor, Spring Studios.
Hello, can everyone hear me? Yeah? All good? How are we all doing? Have enjoyed the panel so far. I think we're going for a slightly different mix now, going from looking at more how you operate within fintech to actually how do you invest in it. I personally feel really lucky to host this panel as well because there's people who I look up to as others who have been in the industry for longer than me, who have achieved a lot more than me as well, who hopefully I'll emulate one day. So I think what we want to start with is giving everyone a bit of an understanding of actually what do investors look for in startups. And we're going to bring it back a little bit as well to give you an idea of how these people invest and the types of companies they look at as well. I'm going to start at the earliest stage possible. So idea to MVP and pass it over to Shane from Shorooq. Shane, so I guess my question for you is, one, how does your company invest? What type of startups do you look like? What are some of the features? And then what are the qualities you look for in those companies as well?
Hello, everyone. Assalamu alaikum wa rahmatullahi wa barakatuh. Really excited to be here. So my firm, Shorooq Partners, we're an early-stage tech-focused venture capital firm, and we predominantly focus on pre-seed and seed up to Series A. And really, the way we define it is we would like to be the first institutional investor on the founder's journey or a cap table. So about half of our first tickets have been pre-revenue, and now we have a 65 portfolio companies. A lot of companies you might have heard of, be that Lean, Sarwa, Pure Harvest, Smart Crowd, and etc. We have been the first institutional investor on the cap table. So the way we look at it is, how can we find the founders of a vision that we're excited about the thesis, and we try to really focus on, are they the first mover in that large and massive growing market? So you can be a great business, but not a great investment. And we're looking to find the A+ founders who are disrupting a large, massive market, being the first one. Be that example like a Pure Harvest. Now, Pure Harvest is a leading agri-tech, a food security company. We produce about 500 tons of tomatoes a month. And when we backed them, literally there was no concept of food security was this popular. And we believe that we can supply fresh tomatoes in the region that is not air freighted, so we can cut the margins and be very efficient with the cost. And now the thesis has been proving. The company raised about $400 million of capital, and we co-founded the company and led the pre-seed and seed round. And we have very example like Sara. We led the seed round. It was just two founders coming up with robo-advisor thesis back in 2016-17, and now they let Mubada led their Series B, and the company is doing phenomenally well. So we have various examples where like that. We were the first idea thesis where the founders are just coming with MVP product, and we're trying to find the right go-to-market strategy to help them scale.
And Shane, just on Sara as an example then, what really stood out to you about the co-founders there? What kind of characteristics did they show?
So every company, every thesis is different. So when we invest in fintech, which is a big part of our investment strategy, we try to see if the founders really know and can articulate what they're building. Robo-advisor is very different from open banking to credit card issuers to payment to remittance. So do you understand this market? And second, can you navigate this regulatory landscape with each regulator? This is different from a trucker business where you have to really know how to work and talk to the truck drivers. So Sara, the founders, Mark, Chad, and Nadine, they knew exactly what they're building because their background actually came from North America, from the user's experience. So we believe that here we don't have a lot of investment solutions, especially for young and growing millennials. So Sara really addressed that, and they were very good at convincing why they are the first innovation testing license from the DFSA back in Dubai regulator, and also ADGM regulator, and they also have a good angle with Bahrain. And we took the first ticket, led their pre-A also, and the company has been scaling very well with now about $300 million plus AUM.
Nice, a really big company as well. So just to synthesize what I think Shane was saying is large market opportunity, credible founders who know what they're talking about and can actually sell the product, not just to customers, but to the wider market as well. I'm going to switch and ask Sara. So Sara, I believe that where you're at with Novo invest at later stage to Shorooq.
Yep.
Can you talk a bit more about that and let us know actually, are those qualities the exact same then, or are there other things you add into the mix?
So the way that MSA is positioned is a bit different, but definitely we, source our pipeline from the likes of Shorooq and earlier stage investors and accelerators. So MSA Novo is originally a spin-off of MSA Capital, which is a fund that is based out of China, has been there for many years, invested in large companies, early investors in the likes of Stripe, Uber, Airbnb, and a lot of Chinese-based companies. And we saw that there is definitely a need for investments in emerging markets with a Chinese lens in a way, because a lot of the Chinese models are mobile-first models, and the way that they're built are very targeted at high velocity, low cost models. So these tend to work very well in emerging markets. And MSA Novo is sort of a spin-off of that. So it is one of the only global institutional funds systematically investing in emerging technology markets across the Middle East, Latin America, Southeast Asia, Sub-Saharan Africa. And the way that we look at our investments is mostly from a China lens and a global lens. So we've seen what has worked. We've tried to bring in technologies from China and from other markets and try to blend them in with emerging markets. And I always say this, that innovation does not need to be disruptive. We do not need to reinvent the wheel. We can take what has been created before and localize it to local markets. And I think that's what mainly makes probably Series A bit different from seed stage. I think nowadays there is a very slight difference, because at seed stage and Series A, you're still, building, failing, trying to find the right product market fit. Series A plus is a bit of a bridge round after, Series A, where companies have matured a bit. And then the sweet spot is Series B mostly, is when companies begin to actually grow and scale and build to expand into other markets. So you're not only a local company or a regional company, but you are globally relevant. And I think the spectrum of founders also changes. The way that they prioritize their operations, the way that the team grows as well is relatively different. So I think that's that for MSA. It's more of a global outlook into the region.
Okay. You mentioned seed Series A there. Can you give a bit more insight to the audience of actually what is a Series A company, revenues, team size, stuff like that? I know it's not generic, but what are some of those characteristics as well?
So I think that it varies, or it varied over the last 8 years. So typically, seed stage companies before, maybe 5-7 years ago, they had a valuation of a maximum 5 million. Nowadays, we see seed companies having valuations anything ranging from 15 to 20 million. So the ecosystem has really burst, and there's an influx of founders. So I think the main to put it in a very simple way, so I think Shorooq mainly focuses on seed stage companies. So that's companies that are investing in smaller amounts to try to build the product, build the team, trying to find an addressable market, trying to find a product market fit. And seed stage companies are in a way doing the same, but they have more funding or are raising more larger ticket sizes to develop the product and actually test out the product. So the product is more mature at a Series A stage, I would say, if I were to put it in simpler terms. And then Series B is a completely different stage. It's the larger ticket sizes, larger investments. You have a much less investors, but bigger ticket sizes. So I think that's where it varies. And it's also different from, I would say, region to region. So a seed stage company in Silicon Valley is not like a seed stage company in the Middle East or in Sub-Saharan Africa. So the size of the region and the ecosystem within the region also really plays a big role in defining what a Series A or seed is.
Thanks. That's really helpful. And I guess let's bring it back to the Middle East, given that's where we're based and what we're focused on. Simon, I want to go to you. So I believe you work with companies probably across the spectrum, right? You work with companies at Chain stage, at Sara stage, and beyond. They've mentioned market, they've mentioned founders, they mentioned being able to build a local base and then regionalize and expand more globally as well. Are those the similar characteristics you see when you're looking for high growth companies to work with, potential unicorns? We'll get onto the question of can unicorns actually be built in the Middle East a bit later as well. But yeah, go ahead.
Thank you, Josh. Hello, everybody. Massive thank you to Fintech Bay for bringing this panel together. And I'm delighted to announce that my business, founded in the UAE 12 years ago, is actually coming to Bahrain. We're opening up here in Q1 of 24. So this is a very resonant occasion for us to be with you today. What do we do? Well, to answer your question, Josh, we bring in international businesses from a G7 location where they have the potential to have a localized offering here in GCC and specifically in Bahrain. So for us, the big difference that we're always looking for is not just the quality of the founder and the product, but also can that business actually have a physical presence here in the region? And if we are looking at businesses in those G7 locations that don't show those characteristics, we won't work with them, because we know that when we're going to be raising capital that often goes all the way from Series A through to pre-IPO, so some of the numbers at the back end are pretty large, we know that if we don't have that localized piece to their offering, then actually the funding part of the equation gets extremely difficult to execute. So I think that would be the difference for us. We meet a founding team. How quickly do we see an authentic belief in doing business in this region? It may be hiring locally, local corporate setup. Maybe they need regulatory licensing. Maybe they want to have an intern talent pool or a deal with a local university for some academic research. Those are some of the buttons that we must see in that founder journey.
And Simon, just on that, you mentioned the kind of breadth of time you've been working in the Middle East. How have you seen that company incorporation, the setup process change in those years? And where do you think it's going in the next few years as well?
Yeah, great question, Josh. Look, I think the reality is the setup process for any organization that is already in one of those G7 locations feels very smooth and slick here. I mean, the reality is...
From time to time.
The piece that isn't, let's face it, is the banking.
The banking is always an issue.
But the piece that actually is so digital, everything down to getting that founding team, driving licenses, kids in school, all of that piece actually works very well in the region in our experience. And critically, the direction of travel is ever better. So the feeling people have is they can see where it's going next and how the next team they bring into region is going to be even easier. So, I mean, of course, there are blockages. There are anywhere in the world. But generally speaking, they're not going to be the thing that stops a business coming here. There might be other things that are the challenge they face.
Okay, cool. So we've got incorporation and actually the setup process, market sizing, founders' characteristics. Alex, I'm going to come to you now. So again, slightly different to the other panelists in that you tend to work with corporates and ideate with them and build out businesses there. What are the variations in how you look at, I want to say companies, but probably ideas at your stage, and how does that work?
Yeah, well, thank you very much for having me today, and great question, because we are a very different animal, I would say, to the typical investor. Actually, we are not an investor, we are an operator. We are building ventures. We are building ventures and venture studios for corporates and sovereign wealth funds. So if you have been here yesterday, the first panel, you have seen the executives of large financial institutions talking about how they deal with innovation, how they cooperate with fintechs, and they were naming investment, cooperation, and takeover. Basically, the three means of the typical innovation journey of a corporate. And what we are doing at Stryber is basically we are adding a fourth component to this, which is building. And that always makes sense if there's not enough deal flow to invest in, to acquire, or to partner. And this is quite often the case, especially in regions where you want to specifically develop sectors or specifically have a strategy that cannot be filled simply with deal flow, with enough deal flow. So this is where we come in and where we help our clients to develop that strategy, that investment thesis. What should they go after? Our clients are strategic investors, so they typically own the majority of what we are building. And in that matter for us, it's about finding opportunities rather than startups. And those opportunities are tailor-made, bespoke for our clients. That is formulated an investment thesis that is 100% matching with their strategic intent. And then we're finding those opportunities for them, very data-driven. We have a specific analytical tool for that, so there's no crazy ideation around this. This is very, very data-driven, very analytic. And if there is a startup around that actually fits that, that's some coincidence, and that's great. It could be an investment opportunity. But then for the residual value that is not covered by the deal flow, that has to be built, and this is where we come in. So there's a few aspects to this business where for our clients it only makes sense to invest in these opportunities if they can leverage assets. I believe every venture capital finance startup is much quicker and has more money to pursue it. So our clients need to leverage assets they have. So it's could be a banking license, it could be access to a customer base, it could be really anything. And out of that, or based on that, we are helping them to launch ventures that are addressing exactly that strategy with exactly the asset and going after the market opportunity as intended. Also, when we are looking for the founding team for such a startup, we are probably a bit different. We are addressing a different risk-reward profile of founders. So just imagine you have founded your first 2 startups, maybe you're in your mid-30s, you have a mortgage and 2 kids. You have a different risk-reward profile than the 20-year-old or 25-year-old graduate founder, right? So we're typically addressing these more mature founders where it's clear that with us, the funding is sorted out, because that's coming from our clients, and they can leverage on assets our clients provide. So it's a really comfortable, in a way, position for a founder. And we need specific, very experienced founders for this kind of business.
Okay,
So
cool.
we're probably addressing a very different segment of the market on all sides.
So I think that brings us on to the next topic I want to talk about, which goes across one of those key themes identified through all answers we've just received, which is market sizing, right? And Alex, I'm going to come straight back to you. How do you look at market sizing and the impact of market size when you're working with these corporates? Because there's 2 points to how you work. There's the corporate innovation to make their operations, their reach better, but then there's also the equity incentive at the end of the tunnel as well. So how do you look at market sizing in order to evaluate the opportunities?
Look, at the end, we all want to build large ventures, which we call unicorns.
Do you need to build large ventures? Is
yes,
probably
indeed.
the question
Oh,
versus
yes, indeed.
wanting to.
So also with our clients, we're not tooling around and building small businesses. The ambition level of our clients is just as anyone who is in an investing business. We want to create a lot of return. And if you think about our typical client has around $5 billion US in revenue, and we are talking about opportunity that is roughly a few percentage points or up to 10% of that. So we are really going also after the unicorn opportunities. And in the market, I think it's fair to say that each individual market is in this region probably rather small. So we have to really think cross-regional in this respect. But there's a starting point with the assets of our clients in some market, and then we try to expand from there, but addressing a large market for sure.
That makes sense. And then Shane, you kind of pushed on the market point probably first of all when you were giving an overview of how you look at companies. My question on that side is, what is a large enough market? And I know as an investor, it's a difficult question because you see pitch decks every day with our total market size is 85 billion, 100 billion, numbers which you can't really properly comprehend. How do you look at it as you start to see a company, and how do you calculate that market size for yourself almost?
So I believe there are 2 generic ways to do it. We have a top-down and also bottoms-up. The ultimate question we at Shorooq try to answer is, can this company be a minimum $500 million company? Especially assuming some bottoms up, we can do P times Q, price times quantity of the revenue model. Can we actually see this company will be valued at $500 million plus company in the region? We heavily focus on Middle East, North Africa, Pakistan, Bahrain, Saudi, UAE, Egypt, and Pakistan as our core, with some other adjacent markets. So can this model actually get there? If we don't believe it can be a $500 million company, it's not an automatic pass, but we do need to really be convinced that can we underwrite X type of return and can they actually be the first mover market. I believe in an emerging market like ours, just because looking at the past is not a good reflection of the future. That's really why our job is interesting and difficult. But I need to have reasonable confidence with this founder, with this model, can we actually see a larger market? Just 3 to 4 years ago, BNPL really didn't exist. But now, as you know, companies like Tamara and Tabi are crushing it, doing multi-billion-dollar GMV annualized in 2 to 3 years. And I don't think any one of us really forecasted that in the past. Company like Lendo, the SME lending, when we first backed Lendo, there are some companies like Beehive, Liwa from different markets, but still was not large enough. But now I can tell you that a company like Lendo, we're doing $100 million, 100 million SAR per month just on the company alone. So this market, we're all kind of making it together. So that's why, as long as I believe we can see a path to a $500 million company, even if today it might seem like a small market, we would like to take the risk.
Okay, thank you. And then taking that from the larger market opportunity to the regional and localized, Sara, I guess when you're looking at ideas which have traditionally worked in Far East Asia, how do you calculate the opportunity size when you're looking more regionally? So bringing an idea which has done well in China and bringing it to UAE, Saudi, how do you start building that base and working out where's the right market to start testing that in as well?
So great question. So I think when it comes to our approach, because we are exposed to so many different models and industries in different emerging markets, it's more of an industry approach. So definitely the numbers matter. We try to also calculate what is the valuation of this company 3, 5, 8 years down the line. But it's also mostly what's the size of the industry within this market. And then when you're looking at the region here, it tends to be a very united yet fragmented market, the Middle East and North Africa, because you look at, for example, Jordan, Egypt, and I said this before, these are mainly hubs or kitchens for these tech companies. That's where all the talent is. But then they're exporting all of these different products to the GCC, namely Saudi, UAE. So that's where the market is. That's where the activity is happening. And when we look at it, it tends to be quite confusing at times. So how scalable do we want to be? Do we want to tap into the Jordans, the Egypts? Do we want to tap into Saudi, for example? And then when you look at the different industries that are booming nowadays, so we've had the crypto and blockchain burst the past few years, and now AI is trending. We were trying to look at models for simply digital payments, like buy now, pay later, cardless and wireless payments. And now you're looking at models like neobanks that are completely exploding. You have, for example, in Latin America, Nubank is actually one of the largest banks in Latin America, and it is a neobank. And you're looking at different models that are being replicated in the region. So it's more of a matter of the valuation and the size of the industry, because the world has become so connected and we are really all global consumers now. And it's just trying to find that right model where it's regionally relevant. You will have consumers within the region, but also how are you able to scale it globally?
Thanks. That makes a lot of sense. And then I guess it goes to Simon's side of things, where you're actually talking with the founder about which market to launch in. So they're from G7, they come over to the Middle East. How do you determine the best market to launching? So Bahrain, for example, at Spring Studios, we help companies launch here and build out here because of connections, because of the population size, because of the opportunity. How do you do that analysis?
Yeah, thank you, Josh. Just to pick up actually on that last point, and then I promise I will answer that question. I'm a great fan of a movie some of you guys will remember called Ronin. You have to be a little bit seasoned to remember that movie, forgive me, mid-90s. And in that movie, Robert De Niro famously said, before you go into any situation, know what your exit routes are. And I think this applies for me very much to how we work with founders, talking about total addressable market, therefore what funds you might better raise over what time period. that this region has to provide itself more exit opportunities, and the capital markets have to move and are moving. I've drunk the Kool-Aid, I can promise you, to a position where actually we can justify some of the check sizes along the journey because there is the ability to achieve exits here, not just somewhere else in the world. And I think that's a very big issue around, do we get too worried about how many consumers are in the region, which is obviously a relatively small region? Actually, if we can achieve exits in the region, this makes a whole different ballgame for inbound. To your question, Josh,
can I just add another question quickly on that?
Yeah.
That exit, what's the path to exit? What does an attractive exit valuation, let's say, look like to you in the region? Is it the unicorns we're trying to find at the moment, or is it a lot lower?
An attractive exit for me is where that exit is oversubscribed. So look, we're blessed in this region that whilst we are busy IPOing state-owned enterprises, basically, everything is oversubscribed. Now, this is really interesting because we're not going to get Bay Area valuations anytime soon. I'm convinced of that. Not even sure I want them, actually. What I do want is, if it's primary issuance as an exit, I need to see depth of book. And I think the potential for that in this region is super exciting, because we've got from the smallest family office and foundation all the way to the sovereigns to help build that book. That for me is much more important than a lofty valuation, but nobody supporting it. And 3 days later, the stock's down 30%. So that's how I'd pick up on that, Josh. As to the regional footprint, it's going to depend hugely on the obvious factors. If this is we were chatting earlier on the panel, if it's some EV manufacturing business that needs huge footprint of space, it's probably not going to come to Bahrain. Equally, if it's a business that needs direct access to decision makers, talent pool, and it is in fintech and it's not too body heavy, HR heavy, what a great place this is. Why not be here? You're going to get to those decisions, frankly, quicker than in UAE. So I think for me, it's normally for us around, what type of business are you? Do you need a land footprint? If you do, you're going to end up probably in Saudi, UAE, the larger landmass areas. Pretty obvious, right?
Thank you. And hopefully that on the market help the founders in the audience and also the investors understand what some of the VCs look at when they do that. I guess I want to change tact again, and we've talked about where you invest, the characteristics you look for in an investment. I guess I want to steal some of your secret sauce. How do you find these investments? What's your sourcing strategy as investors, and how do you go about it? I'm going to start with you, Alex, on this, if that's okay. So how do you find those ideas? What do those ideation processes look like?
Yeah. Double clicking on what I've said earlier about finding the right strategy for our clients that are the strategic investors in what we are building. It's really, sorting the innovation strategy out first from core to adjacent over diversification, and seeing the opportunities there in terms of asset leverage. What kind of assets could we leverage with our client? Then matching that with the opportunities that are at hand in the market, filling that again with data from our analytical approach, where we find signals of businesses globally that kind of address that market niche, that there's a clear signal between problem and solution and somebody putting money into it. So we're looking for venture capital funding signals. We are looking for for growing signals, like numbers of employees over time and stuff like this. So analytically, we can track down a few business models. We call that the short list. And typically, for any given opportunity, we find 10 to 12 business models that fit that short list.
Can I just ask on that?
Yeah.
How many ideas do you kill before you get to that short list as well? I know as investors, we probably see 200 ideas before we do an investment, right?
Right.
Is that similar for the business models you identify as a short list?
Yeah, I think active venture capitalists that also are analytical and data-driven do it probably very similarly. And you can see thousands of signals. Typically, in any given opportunity and niche, we see in our database 10 or 20,000 signals that could match. We started to sort these already with artificial intelligence because the databases are not so well maintained. So typically, if you look up any any database, for example, Crunchbase, you look into that and you see the description of the startup, and then you click on the website. What they're actually doing is quite different. So there's a lot of analytics to be done to sort this out, and we narrow down this space of 10,000 signals, narrow down to a few hundred, which we then really go one by one, and really a lot of manual work to see what are they doing exactly.
Okay.
So it's really a lot of material to look through.
And quite a lot of outbound, so it's you going to hunt for those sort of ideas, right?
Yeah.
Simon, I guess for your business, do you have a lot of inbound activity where people come to you? I obviously see it a lot with companies from the UK where I'm based, reaching out to me asking, how do I get to the Middle East? How can I do this? Do you have a lot of the same?
Yeah, it's a great point actually. We reverse engineer that process. So first thing we will always do is spend time with the key decision makers in the region to understand what they want to have themselves in this region. So to exemplify that, one of the major hospital groups in UAE identified a pathogen genomics requirement, i.e. spotting germs before you affect bad outcomes when a patient is actually in hospital. That discussion with us led us to a clear understanding of needing to find software companies that gathered data in this genomics area, which could then work with that particular UAE hospital group. So we're probably always looking for a lead from the region first, and then, as I'm sure my esteemed colleagues would agree, it's shoe leather. It's a team on the ground traveling 52 weeks a year, in our case across G7, to then fill that demand. But we're probably not just randomly looking for megatrend sectors and hope that they will localize and hope there will be demand in the region. I think we want to know what the region wants in the first place.
Okay, thank you. And Sara, I'm guessing quite similar in understanding what the region wants, but do you have that set list of opportunities MSA have looked at previously in China from their business and then go, yes, we'll do this one, we'll do this one. That didn't work. How does it work on your end?
So I think I'm a bit aligned with Simon here. We tend to see what the region needs in specific. So we also, the way that we invest is that we also try to invest in potential partnerships. So for example, if a company or if a government has a certain mandate, for example, to improve its life sciences entities and institutions. So we go back to our portfolio and see, okay, what companies can we inject into that mandate? How can we cooperate? How can we create these partnerships? For example, we've seen a lot of AI companies and deep tech companies pop up here, and we do have the tech that has already been created, that has already matured in China. So how do we bring in that technology and help that company catalyze the growth of that company? So it's not just looking at pipeline, seeing what's an investable company and investing in it. It's beyond what we can do as investors, and that's how we position ourselves as value-adding strategic investors, is that we're not just going to write you a check and see how you grow, but how can we also be active investors within your growth and bring in all of that diverse portfolio and also plug it into that, because it's a win-win situation. At the end of the day, we are your business partners. We're not just investors, and we are stakeholders. So I think that's mostly our approach with how we merge both markets.
And I'm guessing part of your role in particular is building that community as well, building that brand awareness, identifying who could be parts of teams which you've invested in, teams you're building out. Is that correct?
Definitely. So I think the one thing I look at as an active investor is the team, actually. And maybe that goes back to your first point. What really differs from a seed stage company to a larger scale company? You see the evolution of the teams as you grow, and then the diversity of the teams within these large companies are also so important because they bring a wealth of knowledge from each area, and global diversity in a way. So you always find certain nationalities that are very focused on certain parts of the tech in the tech teams. You have a lot of people that are, forward facing with the clients, and that diversity within the team is also very important to gear a company towards growth. And that's how I think, that's just one of the things that we look at. It's not just the founders. For me, it's the team that the founder has built.
And helping them build that around that as part of value add, right?
Yep.
Cool. And then Shane, I guess 64 plus portfolio companies, your inbox, you just rely on that. You get 200 pitch decks a week, and you just sift through them and find the best one. Is that how it works?
So we see 3,000 companies a year.
God.
So it's a lot. Probably I will start with, out of the 3,000, at least 2,000 shouldn't be, frankly, in our inbox. I do think because we're very active, a lot of companies, humbly, we're really blessed to be reached out. And out of that, we invest in about 15 a year. I guess one, just I think we're probably my last remark. We're constantly always looking for the first mover company. I think that's really the critical for us to be a good seed stage, early stage VC. I personally believe, like investors and founders and partners, perhaps we don't spend enough time to really be thoughtful on what we're building, and there's gonna be a fundamental demand. Because I think it sounds sexy to be an investor, it sounds sexy to be a startup, but what are we really addressing with our business model? What's the thesis? And am I really the first person? You will be shocked how many times we talk to the founder to ask, like, we just met another 10 companies in this segment. But like this, oh, like I didn't know there were actually 10 other companies. Like, yeah, there are 10 other companies in this country alone, but if I expand to Saudi, Egypt, and Pakistan, like there are just a lot. So that simple due diligence and really being thoughtful on how you can differentiate is how we try to also make an investment.
Okay, cool. Conscious of time, I want to switch just quickly and get a remark on everyone on how they view the Middle East startup ecosystem at the moment. What are some of the issues and what some of the potential you're all looking out for? Sara, I'm going to just go down a line to start with you.
I think in terms of venture funding, it's definitely geared towards the Middle East because there's so much unexplored potential. And then when I'm talking about Middle Eastern market, so I worked a lot in payments before, and I've been to very underserved areas of the Middle East when it comes to unexplored entrepreneurial ecosystems. So I've been to Iraq, for example, and saw the incredible potential for a payments industry there because it is such a heavily cash-based economy. So it's more of exploring these virgin opportunities within these hidden markets, and then that's where more developed markets within the region can come and sort of plug and play. So we've tested it, we've grown these companies in Saudi, in the UAE, in the GCC. How do we replicate this and plug it into more underserved markets? Similar to Egypt as well. That's a market on its own.
Yeah.
And you see every market evolving in its own way. So you see e-commerce centered in Saudi, UAE. You see payments incredibly growing in Egypt, but then there's a struggle to extract that and make it regionally relevant, I would say. You would see all of the different tech hubs and the talent hubs hidden in Jordan, for example. So I think the region is very, very promising. We have a lot of talent. I think the talent pool is heavy, not in all areas.
And ever increasing as well.
And ever increasing, for sure. There's definitely an appetite from global investors. So I think the past 3 years, we have seen an influx of international investments coming into the region, as well as a concentration of local investments. So when you look at, for example, Turkey, most of the VCs there are very European, funded by Europe. You look at sub-Saharan Africa, mostly North American, European dominated as well. A lot of French investments there. But when you look at the Middle East, I would say about 80% of the VCs there are locally born and bred. So these are all local VCs. And when you think about it as well, the first accelerator in the region was in Jordan, Oasis 500, back in 2008. So we are relatively a new market, but we've been there. It's just a slow growth, but I think we've matched up to the global level as of now.
So just to summarize, I'm conscious of time, untapped market opportunity in non-tech hubs, so the likes of Riyadh, Dubai, etc., and also actually more unlocalized investors coming in. I've definitely seen some other firms looking to raise strategies focused on the Middle East. That's actually how Spring, the Oryx Fund, Hambro Perk started, but 8-9 years ago now. So I think a lot more of that. Alex, when you're working with corporates, how do you see the opportunity in the region?
Well, I believe there's a great opportunity in all these 2030 visions, 2031 and 2040, depending on which country or emirate you're talking to. And timing is running out. So there's a lot of momentum building up to achieve those goals with a lot of money behind it as well. And I think there's an amazing opportunity for all founders out there, including everyone here on the panel, to be part of that journey. And that's very, very interesting. Those opportunities come to play. You can actually read it quite transparently in those visions, in those strategies, what they're going after. Is it agri and food? Is it manufacturing? Is it automotive? Is it fintech? What have you? So there's amazing opportunities in this region. Now we are here on a fintech conference, however, and in fintech regulation is obviously an instrumental part of how startups can be built. And our panel says about scaling and building unicorns. Here I see a challenge, to be honest, because the market is such, well, the markets individually are quite small. So either you have like a dominant monopoly kind of strategy to make that happen, or you need to think regional, international from the get-go. I think the transportability of business models is a challenge due to the different regulations in these markets. So I wouldn't be surprised if investors or startups would pick up an M&A strategy where they've especially fundraised for that to buy similar models in other regions, in other countries. So to explore that opportunity faster, not going organically everywhere themselves.
And look how they grow out here. That makes a lot of sense. And then Shane, I'm guessing the team's based all over the region. Is there anywhere in particular you're focusing on with Shorooq in the next few years?
First of all, I really echo with our esteemed panelists that I believe actually the center of gravity globally is in the Middle East at the moment. This is really probably the first time where we can see from the increased traffic and increased prices, but really we are at the center of gravity, and the US, Asia, Europe, everyone is flying here, and we should really capitalize on this momentum, because if we don't, I really think we're gonna have so much regrets. For us, we generally do like anything on the B2B infra, what we call, be that fintech, logistics, food security, climate, and etc. And we're seeing great opportunities that we want to double down, triple down. We have a lot of capital we're actively deploying from across the asset class, and we want to pick the best founders. And we've always been consistently deploying since 2017, and we would love to support if you are available looking for strategic capital.
Nice, agreed. And then Simon, I'm going to let you finish by saying how amazing Bahrain is, how great a job Bahrain Fintech Bay has done, and all the partners on this panel. And that's why you're opening a new office here, and why you're looking at Bahrain as your sector for growth.
Yeah, absolutely. And I think knowing we haven't got long, Josh, so I just want to sprint through a couple of quick points. One of them is not often raised, and it is the tailwinds for Bahrain and the region caused by the problems of others. I can tell you guys, if you're less on an aircraft than my team and I, and those of you who travel as much as we all do, you'll be seeing it for yourselves. The pain factor in a lot of those G7 markets for fintech founders is so significant that alone is bringing the highest quality operators to this region. And that is in addition to all of the cool stuff that is being done already here, availability of support, capital, talent pool as well. So there's a push and a pull factor. And to Shane's point, if we do not take advantage of this window of opportunity where, frankly, many of the Western countries, geopolitically and for other reasons, are having a shockingly bad time, this would be a tragedy for the Middle East. I would leave with one more comment. I love to see this region gain international confidence. It, for me, is the thing that has been lacking from time to time. There is no reason for this region not to be the most confident at this point, Q4 2023.
Thank you. And on that note, I'll summarize. Founders, focus on your market, your characteristics, and your actual confidence in selling your product, and make sure you capitalize on the opportunity the Middle East, Bahrain, UAE offers at the moment as well. Thank you, Simon, Shane, Alex, Sara. Thank you all.
Thank you.
Thank you.